well, we're going to get started. Again, I thank you for being here tonight. I may have met you before at some of the events or even in some group calls. My name is Jim Sheils. I'm a partner with Southern Impression Homes. We specialize in turnkey rentals, only new construction. It's something that we carved out a niche for about 10 years ago and has become quite popular in the real estate world. Just to give you some ideas, my wife and I do have a best-selling book now. It was quite successful, not only at the bookstores, but also at the last White Coat event. So at the end of this, this really is a great book on principles, case studies of clients of ours that have been successful. You're going to be able to reach out to Caitlin, who is my extraordinaire helper to make sure I don't get lost, and we'll be able to make sure you guys get a free copy out of this book. All you have to do is send your address, but really is a very important read if you're looking about holding your own rental property and not wanting to get caught up in all of the craziness sometimes that you hear about. Just so you know, our sweet spot is very simple. We only work in new construction. We build single family, duplex, and quad units. That has always been our focus, where we've seen the most success for ourselves and our clients. And if you had invested with us 5 years ago in our build to rent program, turnkey, new construction rentals, you would have earned over 69% on your money. And these other things are great. You know, the S&P 500, you would have earned 10.5%. I invest in that as well. A good real estate fund, like my friends at DLP, maybe 13.5%. But there is an advantage to holding your own property. And that's why Jim Dolly and Brett actually brought me into the group, which I'll talk about in a minute. But holding property with the right fundamentals and the right management and the right growth areas has been one of the most proven ways to actually create wealth. So we were actually introduced to White Coat investors by Don Werner. He's a neighbor of mine, liked our model. I've not only worked with Don, he has $4 billion under asset management. I know a number of you invest with them. I've been a family advisor for his leadership team and his family as well. And the DLP team has invested over 40 million into our deals, which is why he said, hey, we offer funds, you guys offer direct property ownership. I really think the White Coat community could benefit from this, and we happily stepped in a few years ago. So to get started building a portfolio with us, you need about an $80,000 minimum investment. We have almost $1 billion under management now through our build to rent program, building new construction. That produces about 56 million in annual recurring revenue for our clients. We've also created nearly 200 million in the last few years in equity for our investors by owning our turnkey new construction rentals. We've got almost 1,000 active investors right now that work with us. And we also have built over 9,000 units at this time, which houses over 10,000 residents, and that's a low estimate, but we're keeping it low. And we do this not by myself, believe me, or just me and Caitlin or Amy, but we have a team of 120 that's growing weekly. And right now we have over 5,000 lots in Florida that we plan to build out in certain markets that we look for the best fundamentals. And those fundamentals, there's 5 things that I was taught by a mentor almost 25 years ago to look for success in investing in real estate. You want to go where there's economic growth, population growth, affordability, desirability, and healthy supply and demand. As a builder, we want to go where there's an undersupply of housing, and that's the markets that we focus in Florida. You won't find us in Orlando or Tampa or Miami. All great markets to visit, but the fundamental numbers don't work, and our job is to find you where we think the growth is going to come next, and also where we can get you cash flow right off the bat. And one of the other things that helps us be one of the busiest builders in the state of Florida right now is we have our own in-house financing. A lot of you are probably hearing that, oh, wow, well, we would have wished we had invested a few years ago because the prices in Florida are still fair, but the interest rates are just absolutely killing it from making any sense. Well, we bring in our own financing and actually are cutting probably the majority of mortgage companies by 2 to 3%. Not only that, we also offer free property management for 2 years and a rental protection program, which our property counselors would be happy to hear about. But that's not the main reason why I wanted here tonight to talk to you. I wanted to talk to you guys about something that's been coming up in a lot of my White Coat discussions, meeting you guys at the events. And that's protecting yourself. As medical professionals, let's face it, you guys put yourself out there not only in the work you do, but the assets you hold. And so people always said, well, Jim, what do you do? How do you do it? And I'm not an attorney. I'm not an accountant. but I try to work with very good of both. And Amy Vo, who we've brought on tonight, and we've been waiting months to line this up to get our schedules to go, has been a friend and an attorney for many of years, has overseen billions of dollars of consulting and real estate transactions, was ranked the #1 attorney in St. Johns County, which is a very successful, affluent county here in Northeast Florida. DLP is my neighbors here. So Amy has really carved out a great reputation and skill set and wisdom in the real estate field. And when I asked her to come on, I was very excited to have her. So Amy, thanks for joining us tonight.
Yeah, no problem. I'm glad to be here.
Now, did I miss anything?
I
Also
don't think you did.
proud wife and mother of two as well. And still runs her own very successful law firm. I think we hit on everything, and also a investor in real estate herself, of course.
Yes. Yep. Investor, develop projects, have a lot of fun, different projects, and fires going in different directions.
Yes, yes. And I'd say Amy and I have a talk probably about every other week. Well, I'll just run some sort of scenario by her. And when we got just a list of questions, we did reach out to some of you and say, what is really the concern with owning property yourselves? Because if you go into like a real estate fund, that's a great way to really leverage into real estate and see a return from it. But if you want to go into that personal ownership of real estate, it's a different situation. So a couple of the questions that I have here, we're going to run through. And then if you have some more at the end, we're happy to answer them if that sounds good. Good. All right, Amy, we talked about this a lot. And I know you've handled
Yes.
things for me and my wife, so I always like to be personal. But a lot of people say, should I buy my property in my personal name and then switch to an LLC? Or should I buy it in an LLC?
So the answer to that will depend on the interest rate that you get. Generally, residential properties purchased in a personal name, you're going to get much more favorable financing options, which is why a lot of people will go ahead and purchase the property in their individual name. And then so long as the lender is okay with it, will then later deed the property into an LLC that we specifically form to hold the property. One of the, in true attorney style, even though I know this like the back of my hand, I did lots of prep and research, just in case anybody threw out crazy questions that I might not know. So I was trying to over prepare. One of the most recent things that I read that I thought was a little bit interesting is, in my 25 years, I've never ever seen a lender have an issue with somebody deeding into an LLC. No problem, you close, you deed into an LLC. But what I saw in some of the articles that are coming out on the Florida bar that I thought was very interesting is there are a lot of people that have these mortgages. And, I actually have one myself. I have an investment property with 2.25% interest, which is insane. I'm never ever going to want to do anything with that property. But most mortgages have what's called a due on sale clause, meaning if you transfer the interest, the lender can then basically say you're in default. And usually the mortgage says they have to send you a notice. You would either deed it back into your individual name, or essentially they can move forward with foreclosure. Now, what the articles in the bar said is it's going to be interesting to see what happens with all of these super low interest rate loans. The lenders might actually in the future go back and look for people who deeded them out from their LLCs, and will then try to push them to have to either deed back to their individual names or refinance. So kind of to that, if you do buy in your personal name while you're actually negotiating the loan and you're getting geared up for closing, that's when you want to get in writing from your lender that you're fine to go ahead and after closing deed to the LLC. I've honestly never had a lender have an issue with that. And most of them at closing are willing to send an email that says, yes, we have no problem. Go ahead and deed into that LLC right after closing.
Yeah. So, and I told Amy I would talk about my personal self on this call just for easeability of understanding. So my wife and I have bought lots of properties together. Amy has done the closing. Amy will, and I did try to look at an LLC loan or my personal name, and I was getting about a 2.5 to 3% better interest rate with qualifying in my name. I would qualify in my name, buy the property. After the property closed, I would deed it into an LLC for estate planning purposes and tax purposes. My wife and I are the owner of the LLC, so it's the same ownership. And I've never had a problem. And I am now 25 years into real estate,
Yeah,
and
me
I've
too.
never had a loan called. So Amy's at the same boat. This is a big story that a lot of people tell. Amy, I know there's one big signal that really is the only thing you or I in both our histories had ever seen when a loan is called. And that is when people stop paying the loans.
Absolutely, hands down. And that's what I tell clients all the time. As long as you're making payments, the lender honestly really usually does not care. They want, if you're making payments, they're good, and you can deed into your LLC, you're not on the lender's radar.
Yeah. So, Amy, let me ask you this question too. And I know we're going to the next one. When and why do people need an LLC? Like for protection? Can we talk about the protection sake and
Yes.
about, I know there's something you always talk to my wife, Jamie and I about, and that was the single member LLC being a no-no.
Correct. So LLCs offer, there are three big things that they do, but the very biggest of kind of the benefits is liability protection. Especially you have other assets. You want to protect your family, you want to protect your other assets. And so long as you don't have a single member LLC, and you have that LLC, then any creditor, any judgment out there that could happen, any, scenario that you could come up with, I was in a car accident and they got a judgment against me. That is, if they try to sue you, you're limited only to collecting what's in that LLC. So that's the best thing, is that creditors, and even to that, when you have an LLC, creditors can only get what's called a charging lien against that particular LLC. And that charging lien is limited to just the assets that are dispersed of that LLC. So in other words, if you have an LLC and that LLC owns a piece of property and you are paying the bills for that property and you're operating through that LLC but not making distributions, that money can stay there in that LLC, continue to make your mortgage payment, continue to take care of that property. And only when you have money that you want to distribute is the creditor entitled to any portion of that money. So that's a way where you can spend the time needed to work out this judgment, work out whatever's out there that might have happened, and work that out without actually having to pay them, because they cannot get anything as you're continuing to pay the mortgage and operate your property.
I imagine that would be especially important for a medical professional with their own practice or other businesses
Yes.
as well. So if they own, let's say, one or two properties in an LLC, like you just said, there's the classic slip and fall. Their practice is a completely separate position.
Completely separate. Completely separate. And if you use the slip and fall, or my favorite is somebody trips on a stair and you didn't realize it was creaky and they sue you and they get a judgment, that person's only limited to being able to sue at that LLC, and that all they can get are the distributions. That's it. They cannot go after your personal assets. And that's the beauty and the benefit of that limited liability company, is that so long as it's not a single member LLC, then the assets of the LLC are the only thing they can touch. The managers and the members of the LLC are completely protected.
Absolutely. And another thing I do want to hit on is once and again, to speak for myself, and I know we've talked about this a lot. I buy a property, Jamie and I deed it into one of my LLCs. I choose to keep a few properties in an LLC, not all of my properties, but a few per LLC. If there is a slip and fall, a lot of people now, entity structuring is important, but nobody talks that much about that monthly thing we pay called insurance. And I know you've had some experience with that. I've had one slip and fall out of owning hundreds of personal properties myself. That was, I think, about 20 something thousand dollars was awarded, and the insurance company paid for it. Can you talk a little bit of the actual protection that an insurance company provides? And then if someone tries to actually sue for more than that, that's when the insurance company's lawyers get involved, correct? And that's
That
quite
is
a,
correct. And
yeah,
that's the beauty of the insurance, is that the insurance company's lawyers will come in and defend you in the case. But you want to make sure, especially if you're deeding into an LLC, that the LLC is the named insured, because otherwise you're not going to be protected. You also want to look at general liability, potentially even an umbrella policy to cover you. That way, it kind of is a double layer protection. Not only do you have your LLC where you have that protection, but now you have the proper insurances. So hopefully the people will look to the insurance first. The insurance will provide the necessary attorneys that will defend you in any action, any slip and fall, anything that could potentially occur on the property, and hopefully settle that. And at the end of the day, you won't know really anything happened, other than at some point you get an updated email that says the case is done, we've resolved it. Have a great day.
Yeah. Well, and I think that's a really good A to Z. So just to kind of backtrack on that and to go through real examples, you've closed a property for my wife and I. We close on it probably in the next few days. We will deed it into one of our LLCs. I'll call my insurance company and I'll add my LLC as an additional insured.
Yeah.
And then pretty much it just moves on from there through my own accounting practices and such. But that, is there anything I'm missing that we do? That's normally stiff. Now we do have to pay, and I know this is a big one you and I were talking about the other day. We need to talk about doc stamps. And
Yes.
what happens when I take my property from my name and Jamie's name into an LLC, I do pay doc stamps for a second time. Do you want to talk about what that looks like in the amounts?
So you do. So basically, doc stamps are $700 on every 100,000. So you can kind of take that number to calculate it. And it's based on whatever the outstanding principal balance is of any mortgage that you have on the property. So if you have a $200,000 mortgage on the property, when that deed is done, you know that you're going to pay $1,400 in doc stamps. And that's the way you can just kind of generally calculate it quickly in your mind so you know what you're looking at. I know that some people are concerned about that cost, but the flip side to that is the benefits of having the property in the LLC far outweigh the cost that you have. It's worth that cost to be able to put the property into the LLC. And the reason you have the doc stamps is basically the way the Department of Revenue looks at it is that when you as an individual have the mortgage and you now deed this to the LLC is going to essentially be responsible for that mortgage. So in their eyes, their mind, the LLC's consideration that the LLC is paying is what it's going to pay on that mortgage. And that's why they use that to determine what the doc stamps are.
Yeah. And for me, I know when we've done loans in the past, it made more sense to me. So let's say the average for our properties that we build, I figured out the average doc stamps to pay a second time will probably be about $3,000 to $3,500. And when you start to average that, people go, gosh, that's a lot of money. And I used to think that as well, until I looked at, I'm a long-term buy and hold player. As you know, I like to hold my properties long term. The fact I could get an interest rate 2.5% to 3% lower instead of just qualifying in the LLC, I said, okay, I'd rather pay that one-time fee to get it into the protection of the LLC than to take the LLC loan directly and have that higher interest rate. And
Absolutely. That's a great point because if you calculate, even 5-10 years of holding at a higher 2% higher interest rate, that's the amount, the differential is crazy.
it really is. It really is. Well, we already hit on this one, the insurance. Did we forget anything about insurance? I mean, the importance of, I know some people talk about self-insure. I'm not even going to talk about that. I've always chosen to write the monthly check to an insurance company. I think you sit in the same boat. Did we miss anything on insurance? Because this is important
Title
for.
insurance. So that would be the other consideration
Yeah.
would be title insurance. And every underwriter has some intricacies or differences on what they're willing to accept. Now, I underwrite through Fidelity. That's my primary underwriter. I also underwrite under Old Republic, but generally fall back on Fidelity. Fidelity does allow a quit claim deed if the property and the LLC's ownership interest mirror each other exactly. And you quit claim deed from yourselves individually into that LLC and that ownership interest is the same, then your title policy, your owner's policy still continues without an issue. There are some insurers, title insurers, that don't allow that. They want to see a warranty deed. So that's just one of the things that, say you're at the point where you're going to have that deed done, we can look at your owner's policy, we can reach out to the company that insured it, just make sure that they're okay, that there's nothing going to happen with your owner's policy of title insurance, and do the deed whichever way they want, whether it's a quit claim deed or a warranty deed.
Amy, I'm going to back up a little because this was confusing for me really for the first few years, honestly. What exactly is title insurance? So we have our property insurance for something, if a tree falls on the house, a tenant messes up the house, and that's property insurance. But what is exactly title insurance so people really understand that?
Title insurance protects your interest in the property, that says that you own the property free and clear of any other interest that could come up. I use my dad as the best example. My dad bought a piece of property. The property had been part of an estate. The estate had been probated. I looked over title, we closed, everything looked great. Fast forward a few months past closing, a great niece of the decedent came out of the woodwork with a claim that she had on a written document, something where her great aunt wrote stating that the property was going to be hers entirely, and that her cousins probated the property improperly. They didn't include her and they were supposed to. And so now she's making a claim on the property, claiming that she had an interest, my dad didn't have a right to buy it, and that she was owed an interest in this property. That's when the title insurance kicked in. We actually went to the underwriter, we had to make a claim, and ultimately what happens with the title insurance is they will, just like homeowners insurance, they will assign an attorney who then handles the case, and basically they settled the case with the person that claims an interest. And so in my dad's case, thankfully they were able to settle it for a minuscule amount. They were able to pay her $5,000. She signed a release to any interest in the property, did a quick claim deed just in case, and it was done. And it was, my dad didn't have the hassle of having to hire an attorney, or AKA pay his daughter, or go through that, no litigation or anything like that, because the title insurance company handled all of it. And essentially, once that was done, there were no other interests, property was free and clear. And that's the best way to kind of sum it up. It protects you and protects your interests in purchasing that property.
Right. Yeah, that's always something that's I think people get confused about, but it really does make a difference for exactly what you've said.
It does. And it's, I am they call us dirt lawyers, because what we do is we are looking at the dirt, the land. And so, our client is essentially the dirt, and that's what the title insurance protects. It protects that dirt, that land that you're buying, and make sure that you're good and you can always own it.
Perfect. How can doctors and medical professionals be protected when owning property? I know we've kind of already gone over this, but I want to just encompass a couple of the pieces that we've talked about here.
So, and that's the LLC. So, or at least one vehicle. And my favorite vehicle is the LLC. The other is having your umbrella policies and your liability policies in place, but making sure that each of your properties are in an LLC. Now, some people like to have a separate LLC for each property. Some people like to have a few properties in, say 4 or 5 properties in each LLC. That will just depend when you sit down with your accountants, what you think is best for your operations, how you manage things. I look at it from a lawyer standpoint, which is not always the same view as accountants. And my view is every property you own should be in a separate LLC to limit that liability as much as possible. And that's what we recommend, especially doctors, lawyers. People like to sue us, especially doctors. And so you want to make sure that you can compartmentalize and protect as much as your other assets that could be out there and subject to a creditor or something happening in the future.
Yes. And I'm one of Amy's clients that actually puts a few in to her distraught, but I do stay well insured with an umbrella policy.
Yes.
That's just what our accountant decided. We keep a few in each LLC, and that works well. But like Amy said, everyone's situation is different, so you want to look at that. But a good LLC, a good insurance policy, especially if you are doing something like me and you're not putting one per entity, a good umbrella policy, I think, is actually imperative. And another level, I think, Amy, that you and I don't think we take it for granted, but we're just surrounded by it. And it's the fact that we are renting property in the state of Florida. And we've seen some major changes we are the United States of America, but we're definitely not united on landlord laws. They vary tremendously state to state. And would you feel, from your experience, Florida is one of the best in the country for landlord tenants?
110%. And it's funny that you bring that up, because I actually had this conversation with somebody yesterday. I was dealing with a client that has some property in Chicago, and Chicago is pro tenant, and they have not been able to get the tenants out. The tenants haven't been paying for 6 months. The situation is just all around horrible. But here in Florida, it is pro landlord, but not to the level where it's unfair to tenants. It's just very business. It is, you have your contract, which is your lease. It says you're going to pay by this date. If you don't pay by this date, then the landlord can move forward and get you out. And that way they can get somebody in that's going to pay.
Yeah, exactly. And another thing that we're watching kick in, which is pretty historic, is the anti-squatter law goes into effect July 1st. Um,
Yes.
Amy, so, and I'll just divulge something personal. Amy right now is started a closing for me. I own a small commercial slash home that was turned into a small school. My wife and I like to support alternative schools. We bought this years ago. Amy did the closing, and the neighbor approached us and said, we would like you to buy the property to help expand the school. We believe in it. My mother's 85 years old. I said, sure, thank you. We've always thought it could be a good addition to the school. Well, lo and behold, we were getting ready for the closing, and there is a squatter that moved into the front property um, to not a very nice tune. And to this nice seller, I mean, salt of the earth guy who's been a landlord for years. And unlike me and Amy, said, I've never dealt with even an eviction in 30 years. I said, well, you're a very lucky man with the amount of real estate you did and didn't. But the story here is this person has a criminal record, has moved into the front of the house, and a note was just sent to him showing him the squatter's laws. And as of July 1st, he will be out within 48 hours. Funny enough, he's been moving out all week. There is something to having, and again, this is not a political thing. This is just sensible business practice for a piece of property you own. If someone has no lease to your property and no rights to it through a lease, then in Florida they will be out within 48 hours. Which I think is a very good thing. Of course, I would think that was very unfair to someone who has a lease with you, but to people who have no lease and no rights to the property and no permission, that's another thing Florida's done. So I'm excited. I don't even think you've dealt with that case yet, Amy.
No, not yet.
Coming up, coming up. Well, let's one more thing, and this is more of an accounting thing, but I didn't know if you had an opinion on this. A lot of the medical professionals on here that we work with, their husband or their wife might be buying quite a few properties and helping with it. Can you talk about real estate professional and how do you get professional status to help get that extra tax incentive?
So this is one of the questions that I said, I prepared for. And my big note is have a really good accountant and call them first. But basically, you have to provide 50% of your services in real estate. You have to work at least 750 hours in real estate each year, and you have to materially participate in each rental activity. And that's where I say talk to a good accountant, because they're going to sit down and they're going to say, okay, well, does this meet the IRS standards for your participation? Does this meet the IRS standards for the hours that you're doing? And that's where you're going to bring them in. And if you have somebody that's creative, maybe they can look at things and help you hit that point where you are deemed a real estate professional.
Good answer. Well, those were the questions that we had prepared that have kind of been the common ones we've been getting. Of course, we'll make sure that any of you want Amy's information, whether it's for entity structuring, which she's done for me personally, for any of this work of deeding properties after closing, she has done for me. She's a full service law firm. Again, I have no financial affiliation with Amy, just to be clear on that. But when Chris and I started doing these properties years ago, people would always say, well, who do you use for mortgage? Who do you use for insurance? Who do you use for legal work? And so we just refer those out. So I did want to make sure, we'll make sure you get Amy's full contact information if you want to talk further on these. But Amy, it would be great if we could answer some of these last questions.
Yeah.
This first one is, do you have to have a Florida LLC or can you get a out-of-state LLC?
You can get an out-of-state LLC. I have clients that like Delaware LLCs because you can't see who owns it. Florida is a very pro-business state, and Delaware is very similar to Florida. It is pro-business. So of any of the two states, if you're going to look at it to see how the laws are relative to the LLCs, Delaware and Florida are your two best, because they are, like I said, they're very pro-business. They mirror each other very much in similarity in laws. So those are the ones that you see that are more frequent. I've also done entities in Colorado. I have clients that have property in New York that like New York. I have others that prefer Ohio. We have a company that we use that actually can form LLCs in any state. And so if you call me and say, I want one in Alaska for whatever reason, we can form that and you can own the property in that LLC.
Perfect. Perfect. And Michael, yes, an attorney advised me to set up a separate LLC. Amy's advised me to do the same, but when I say no, I'm going to keep a couple in each LLC, she says, fine, get an umbrella policy, and we settle on.
And actually, I say that, but to that, I do have a group of properties that's in one subdivision here in St. Augustine. I have 8 of them, and I own all 8 in one LLC because it was just easier.
And you have a good umbrella policy too.
I do.
Good. So yeah, that is common. So you stressed to not have a single member LLC. Why? How is it structured? Thanks for the information. Yeah, I mean, this took me a while too. Amy, John, good question. Can you explain why the single member is just not a great?
Absolutely. So single member is essentially looked at as if it's same as you. It's you might have that LLC, but you're just operating as if it is you individually. And that's why they look at it and say, okay, well, if you have a single member, it's not different. And you can actually foreclose on the interest of a single member LLC. Whereas a multi-member LLC, you cannot foreclose on that member's interest in the LLC itself. So you want that protection. And kind of to that, multi-member, you actually have to operate the LLC as a business. You have to maintain your records. You have to have separate bank accounts, a separate EIN. You can't use the card to pay your personal bills, go to the grocery store, because then you're going to lose that right as a multi-member LLC, and it's going to end up being treated like a single member LLC essentially.
Good answer. Yeah, it's just not recommended, guys. I've never heard a qualified attorney say, yeah, go with the single member, no problem. It's just, you really do fail to use the protection of the true LLC by being.
There's no point in having it if it's going to be single member, because you have 0 protections.
Yeah.
And that's the only reason you need the LLC, or
Yeah.
why, the main reason why you want it.
And how do you know which issues you need a lawyer, accountant, tax guy, and how do they work together? I'll start and then Amy, because in fairness,
I mean, that's definitely probably a good question for you versus
yeah,
me.
I said,
I'll
well,
say you always need a lawyer.
that's like everyone asking me, should I buy a new construction home? Well, I said, well, I'm the builder, so of course I'm
Yes.
I'm the barber telling you need a haircut, same thing. But so the way my team breaks up, I go to Amy for anything from certain contracts, and you guys won't have to do this. If I'm going into a land deal or a larger development project, then Amy might review contracts of that type for me. For the standard purchase and sale agreement, Amy does not review those for me. She'll take the contract and open up escrow because she has a full title company. But I'll go to her more on my entity structuring. I'll also go to Amy, like right now, I'm doing some moving around of my estate planning. I'm deeding some properties from one place to another, and Amy's doing those deeds for me. So normally Amy helps me with entity structuring. Amy helps me with deeding of properties, like from my name into LLCs. And she's done estate planning for me. So that's what I go to Amy for. My accountant will decide, okay, these are the write-offs that you can take. These are, as Amy said, a good accountant, the reasons why you're a professional. And now my wife is a professional. So again, the accountant and tax person, Amy doesn't really give me tax advice. Now, as investors, we'll compare notes, absolutely. But otherwise, it will be just me. So hopefully that's helpful. Now, David, I see you have a question about the quads. I actually wanted to let you know about that. We are down to a number of you have actually bought into our development, Barkowski, which is our 12 building development, quad development in Mandarin, Jacksonville area. It's the highest end area we've ever built a quad in. We have 12 buildings. We're down to our last 3. The down payment on these are 25%. We can get you the numbers on those. And best thing to do to go over the quad numbers. I know a lot of people, we had just sent an email on Burkowski. If you're interested in one of these final quads, we do have other developments, but this was a very popular one, especially amongst White Coat community. Get a hold of Caitlin.Shear at sihomesfl.com. She will get you to the appropriate property counselor that can help you go over all the numbers. Also, if you have not read our book, of course, again, this is the barber saying you need a haircut, but we put a lot of time and effort and case study into that book of different people that have done very well with us, their prior experience in real estate, the lessons that they've learned, and kind of the principles I've learned along with my building partner over the last 25 years with a touch of family. Because for me, this was all about my family life. When I went into real estate 25 years ago, my parents did not come from money. In fact, I was finally able to retire them about 14 years ago, which I was very proud of. But for me, I said, if I can get real estate in place, I can get to the good things. And I have 5 children that I want to travel with and enjoy the world with and be involved in service projects. And real estate has allowed me to do that. And I talk a lot about those pieces in the book as well. There's Amy again. She got so excited. I think that she got taken off. Amy, you missed one question, but that was it.
Okay, good. Yeah, my computer just randomly restarted on its own.
Well, yeah, we were. I think that everyone thought we had asked you so many questions that you just called a timeout. So, but I was just letting them know a little bit about our final quad community. There was one more question, and then we are going to have to wrap it up, guys. I'll get these, or we can do 2 more. This one, Amy, if I live in Ohio and I have a rental property in Florida, do I have an LLC both in Florida and Ohio, or just Florida?
Just one LLC, and it can be Ohio or Florida. You can pick which state you want the LLC in.
Perfect. Perfect. And then the next one, Amy and I did hit on this. It's a little confusing, guys. If I form an LLC for a current rental property, will it affect my current insurance on the home? I currently have it set up for insurance purposes as a secondary home used for a rental.
So it might. Your insurance could potentially increase a little bit. I know my personal experience is that it's increased a small amount, but not anything significant. I think my last house, when I deeded it into my LLC, it went up $25 a year.
There you go. The first slide showed about your returns compared to the S&P. What was the time frame, and how can we get more data from your work? The time frame was 5 years, and I'm happy to get you more data again if you reached out to Caitlin Shear. That was based off of if you had put $250,000 into our build-to-rent properties in the Jacksonville, Florida market over the last 5 years. That would have been your return, and we can get you more information on that for sure. Okay, still setting up, you're setting up the LLC with your spouse still technically counts it as a multi-member LLC. That is correct.
It
That's how I
does.
always do it, right, Amy?
It does. Now, Florida has something that's really unique. You can actually you own your interest as husband and wife as tenants by the entirety, which is great for estate planning purposes as well as probate avoidance. If you do that, that entity as husband and wife would potentially be treated as a single member. So in that case, what I do with a lot of clients, I have clients that have trust. So usually we'll do say 98% as husband and wife and 2% in the trust. Or I have others that want their primary interest held in their trust. We might do 98% in the trust and 2% as husband and wife.
There you go. Perfect. Okay, the last 2 real quick. For primary home payoff, is there a role to put this in an LLC for shield liability? Is a huge umbrella policy enough? We don't have a pool or wild parties, 3 teenage kids. Okay. Good clarity, Ryan. Thank you. Amy, any opinion on that?
So as far as the huge umbrella policy, it should be enough to cover anything, especially if you don't have a pool or anything like that. I think that you should be good with your umbrella policy.
Perfect. Thanks. And do you set up revocable trusts, Amy?
I do. Yes, I do. And we can sit down, I sit down with people and we look at everything to determine what's needed to set up, what you're looking at in the trust. Absolutely.
Good. So here's where we'll wrap it up, guys. One of the most important things, and I can only again say what I've personally done, Amy's personally done. I believe in funds. I believe in S&P 500s. Owning real estate has been my most successful wealth vehicle. And so if the only thing holding you back is understanding the setup, that's why you want a good team member. We'll make sure all of you get Amy's information. The things I've personally used her for is entity structuring. And then for deeding the property once it's closed into the appropriate LLC. That's where she's been great. And again, estate planning, she's also done. God forbid something happens to me and my wife, thanks to Amy. It's well known what's going to happen. So those are three places that Amy can help you. And overall, again, I buy properties with my wife. This is my choice. I deed it at that time into an LLC. I get an additional insured part on my insurance to show that's an additional insurer on the policy. I do a liability, an umbrella policy over. And then I look long-term in my estate planning with Amy of where will these properties go, where hopefully many years from now that they go to the right places in my family. So that's where I recommend Amy. We'll make sure you get out her information. I know we went a little long tonight, but I know this is a very important subject for you guys. Hopefully we're able to answer some questions. Get a free copy of the book, set a no obligation call with one of our property counselors. It's real exciting to watch the portfolios we're building for the White Coat community. We'd love you to be a part of it. So again, thank you for being a part of our program tonight. We'll make sure the recording goes out. Amy, thank you for joining us. I know how busy you are running your own firm and being a mom. Thank you very much for being here.
Yeah, thank you for having me.
Great. Thank you, everyone. Thank you, Caitlin. Everyone have a great night. Take care.